one is this global liquidity, because your point again is your question is so insightful in that, well, wait a minute, it looked like US liquidity was expanding, but then it contracted. Well, then how is global liquidity suddenly? Well, it's because, and you see this in currencies. It's because I believe there is a concerted collaboration.
Mark Yusko is an accomplished investment expert and hedge fund manager hailing from the United States. On February 23, Coinbase, a prominent cryptocurrency exchange, revealed the introduction of Base, an Ether-based Layer-2 network. The platform's objective is to create a cost-effective, secure, and developer-friendly space for building decentralized applications on the blockchain. Coinbase claims that Base will serve as a gateway for users to enter the crypto economy, enabling them to interact with other L1 ecosystems such as Solana and allowing interoperability with other blockchain networks. Coinbase announced on Twitter that it has developed Base, an Ether Layer-2 (L2) solution that enables the development of decentralized applications in a cost-effective and secure manner. The platform is designed to be developer-friendly, making it accessible for anyone, anywhere to build decentralized applications. Coinbase's ultimate aim with Base is to facilitate the next phase of online interaction and to attract over 1 billion new users to the cryptocurrency economy. Mark Yusko recently discussed his opinions on Coinbase's launch of their own Layer-2 solution. But before diving into the video, make sure to subscribe to our channel and enable notifications for future uploads.
So the thing I'm super excited about Coinbase is this decision, as you said, to go with Base and to not try to create their own L1. I think what people really just are still struggling with is this transition, right? TradFi, CeFi, DeFi. And this is a move toward DeFi, clearly, and that's a good thing. But people just are still stuck on this, no, exchanges are bad and not your keys, not your coins. Like, please stop.
Yeah.
Just please stop that. You know, this probably a fad thing. What it means is something that's happening is real and has legs. The idea that Coinbase, which a lot of people say, oh, crypto, it's a fad, you know, as said, right? First they laugh at you, and first they ignore you, then they laugh at you, a bunch of nerds and geeks playing with your magic internet money.
According to Yusko, the past 7 years have seen the poorest GDP growth in recorded history. Currently, the U.S. is on course for a slight decline in output during the first quarter of the year, with a projected decrease of 0.6%. If this median estimate proves accurate, it will be the first time GDP has decreased following 2 consecutive quarters of growth. At the beginning of February, the Federal Reserve increased its benchmark interest rate by 0.25% and did not provide any clear indication that they were nearing the end of their current cycle hikes. While it's still early in the quarter for economic data, today's estimate should be approached with caution. However, the decline in the current median forecast compared to the previous estimate on February 8th indicates that the incoming numbers are not as strong as those seen in Q3 and Q4 of last year. Despite this, several other indicators still point to a high risk of recession for the United States.
Look, I said, I think Q3 and Q4 GDP was essentially, not completely, but essentially an SPR. You know, you released the oil from the SPR, you count it again. Okay, great. And then you had a little bit of the fake, I call it the fake retail sales, which is prices are higher, so you're spending more. Is that really GDP? I mean, I guess technically it is, but I don't like that. So look, I think, you know, consensus for Q1 is 0. You know, GDP now has some big number like 2.5. You know, Atlanta Fed is I would say more accurate than the consensus, but they're not infallible. I would take the under on that 2.5, but we'll see. And ultimately, this idea of no landing to me is kind of silly, right? Because no landing implies that we're still at 30,000 feet cruising along in the air. That's clearly not the case. This is not a perfect economy. You know, we had a year-over-year change in GDP last year of 0.9, that is stall speed, right? That is below the natural rate of growth, which is around 2%. So that is definitionally a recession. Now they're not going to call it a recession because of the fake jobs number. If companies are going bankrupt, how can there be net positive birth death, right? Just definitionally. And so they're clearly just ignoring that and saying, hey, we're still in an expansion. Therefore, technically, the birth death ratio is X, and we're just going to ignore that corporate bankruptcy data. And the number of bankruptcies.
The U.S. equity markets experienced their largest decline in 2 months due to strong economic data, leading to widespread speculation about potential further tightening by the Federal Reserve. With the end of quantitative easing, which was the major source of liquidity and is now being scaled back, the Fed is reducing its balance sheet by nearly $100 billion per month. This reduction could result in higher interest rates and a scarcity of cash, putting pressure on long-term assets, such as unprofitable growth stocks, which have seen significant gains in 2023. To hear Mark Yusko's thoughts on global liquidity, let's move on to the video.
The negative side, U.S. money supply growth went negative, right? Hadn't been negative for almost 100 years, for 96 years. It's pretty incredible when you think about it, 96 years straight of increasing the money supply. But that leads economic activity by 16 months. So you're going to have a downturn, and inflation is going to moderate. And the shelter component of inflation is collapsing. So that's all going to moderate. And I don't think it's going to go negative and deflationary, but it's going to moderate. But the thing that is countervailing, and the cross-border capital guys, I don't know them, but they are amazing.
Oh yeah.
I mean, just amazing. Yeah. And they have the chart, and I've been tweeting it out a lot lately. It's $1 trillion with a T, trillion since October. It's a process of saying, okay, Europe, ECB, you're going to have the strong currency. So the rest of us can devalue our currencies and be mercantilist and sell a lot of stuff globally. All right. So you're in the hot box for the next 9 months. Then we'll get together again. And now you, Japan, you're in the hot box, or you, the US. Last year was the US's turn, right? The US had to have the strong currency so the euro could be super weak, because Europe was on the verge of collapse. Yeah. Remember all the dire things about, and European stocks have crushed it, because they were able to devalue and sell a bunch of stuff, machine tools and cars, that they wouldn't have otherwise been able to sell because China was closed. So, and the yen was, obliterated. Yeah. Obliterated, down 30% through October. And then, bam, recovered 2/3 of that. And so I believe there is a coordinated liquidity provision. But at the end of the day, unfortunately for the masses, it is all net fiat generative, which means net inflation generative, which means net channeling of wealth to the top of the pyramid and impoverishing the masses. And that, I think, is unfortunately how it works.
What are your opinions on Coinbase's Layer-2 launch and the potential performance of the global liquidity cycle in 2023? Please feel free to share your thoughts in the comments section below. If you appreciate our content, we kindly ask that you give this video a thumbs up and subscribe to our channel.